Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Mag 7 update. This is for the week of Monday, March 23rd, 2026, and as usual, I begin with Microsoft Corporation. We did finally set off a significant sell signal. When I say finally, I don't mean like I'm relieved by that, but what I'm saying is we'd been testing this, 4 or 5 year channel bottom at 398.38 for the last month and a half. We even closed above it a couple times, but not by a 1% margin. It was last week that was clearly in the beyond the 1% zone. So we are in a sell signal, and I don't see that reversing unless we can actually close not only back above 398.38, but also above this nearer term descending channel top that actually contained buying pressures, as you may recall, for the last few weeks. This was our aggressive up pivot. In other words, having tested the channel bottom, not having closed below it, I'm talking over the last few weeks, it would have been a settlement above this descending channel top that would have reversed momentum and likely then yield within probably 2 to 3 months the 480s, but not to be. And I don't see this reversing now unless we close above 402.46. Until then, anticipating over the next 1 to 2 months, this could be a 3 to 5 week collapse. We did settle. I'll just mention the S&P 500, the SPY, both settled in a significant sell signal last week. The QQQ is right on the edge of that, NASDAQ 100, so I'm not going to get into all that. You can check that out, by the way, if you go to wickedstocks.com, 14-day free trial. You can follow our daily SPY, our S&P 500 weekly analysis. We're at a big turning point right now, and I think if you are a serious trader, you might want to check that out, just so you can see what the broader market is doing. Anyway, Microsoft is likely to fall into the mid to upper 340s over the next month or two, and I think that the settlement below this channel bottom is a bigger deal than that. I could see, and I don't mean to be incredibly bearish, but I do think the significance of violating this 5-year channel structure, one of the measurements that I've used for many years is the full channel extension as a targeting mechanism, and I'm just visually eyeballing that right here. That would be really the doubling of this channel structure to the downside. And that actually does, and I don't know how exact this is, but it does take us into the vicinity of that October 22 low of 213.43. So yes, holding below 398.38, continued weekly settlements below the structure, in my opinion, over the next full year or sooner, will keep the low 200 region in reach. Let's move on to Meta. Meta is in the midst of, or very close to testing, what has been a targeted support level for the last few weeks, having settled below 676.39. We've been expecting 581.97. This is a 1-year channel bottom for Meta. 1-year channel structure may well contain selling, not only through the second quarter, but even through all of 26. We could come off of here. I have the upside illustrated in just a moment, but I do want to mention that if we do close below 581.97 this week, you might add the 1% violation threshold. I'll let you do the math there. You're basically just taking, 581.97 and subtracting 5.81, which would take you to 576.16. Did I do that right? Anyway, somewhere in there, if we close there or lower this week, and I will bring that up next week, by the way, if we close this week at 578, next week, I'm going to mention we did not close below it by a full 1% margin, so it's still kind of on the edge. If we do close below it by the 1% margin, this is a 2 to 3 month sell-off to 464.83, which is a much more significant structure because it spans all the way back to that 22 low. And so this is a 4-year channel bottom that could contain annual selling pressures. I would expect it within 2 to 3 months of closing below 581.97. Now, upside, I'm going to move on to the next chart. Where are you? It's up here. Here we go. We got a series of charts. Oh, I also want to mention this, that if we do close, let's say we fall off significantly this week, a daily settlement at that 576.16 level. I think that's your 1% margin, which is 1% below 581.97. We can certainly this week test 536.91. I bring this up for you, day traders, 3 to 5 day swing traders, playing the short side, 576.16 or lower, down to 536.91, where profits can be taken. But overall, while we could get a 1 to 2 week bounce here, I do think once again closing below 581.97 464.97, you can prepare for 464.83. Upside in Meta. I'm going to move on to this chart here. I just will simply say that holding above 581.97 will allow 746.82 over the next 2 to 3 months. Now, I could provide, buy signals. There are a number of levels. One is 661.28, the low of the high. And I could also just take us back to this channel bottom at, wrong chart. This channel bottom at 676.39. If we close above this week, not going to happen. And then we are anticipating 746.82. But I think holding above 581.97, as long as we don't close below it, you might reach for 745, 750 strike out of the money calls that don't expire. I'd go 6 months out on that 2 to 3 month play. On to Google. Google's been in a sell signal now for a month and a half. Well, in the week of February 2nd, we had a significant key reversal high. We pushed to a new all-time high. We then closed below the previous week's low. That is a bearish engulfing pattern in candlestick speak. And then we proceeded to close below this rising channel bottom a week later. So we are in kind of a double sell signal now, have been for over a month, anticipating 234.97 over the next, this is that church steeple rally. They tend to show a similar downside. So what is this, September? I'm just going to guess here into November. This is a 2 to 3 month move. So, yeah, we're not there yet. But I will say that if we close this week below 296.12, which is this pullback low, and it's been containing selling pressures roughly, if we close below it this week, then yes, within 2 to 3 months. So we got a lot of 2 to 3 month time horizons. And that's interesting. Right now we have a 2 to 3 month downside time horizon in the S&P 500 and the SPY. Once again, you might want to check that out by going to wickedstocks.com. Take advantage of that 2-week trial. On to Amazon. I don't think, let me go back to Alphabet. I don't think I covered it fully. I will say, and I'm not expecting this, but you've got 316.62 and 324.36. This is a range of resistance that can contain buying through April, even through the second quarter, and below which we do expect to 230s. Now, if we do close back above 324.36, then all bets are off. I do think that neutralizes the key reversal high. It neutralizes the sell signal below this channel bottom, and we can then expect upward trade as we continue into later Q2. But we're not going to see that this week, I don't think. On to Amazon. Now, Amazon, we had a big sell signal, as you may recall, the week of February 2nd, below this 236.71 rising channel bottom, anticipating the very real possibility of falling to 182 even, which is a one-year channel bottom for Amazon. On the way down, we did get snagged a bit at this channel bottom. We closed below it, then popped back above it. It is at 198.94, the descending channel bottom. Still valid bottom-picking territory. And we also have the low settlement price of 198.79. So, I also think that this area, if settled below, is your next go with sell opportunity. In other words, if you're long Amazon right now and your time frame is 3 to 5 weeks typically, closing below 189.79, you want to be out of that trade. In fact, you could play the short side then. If you're kind of a short-term swing trader or in options, you could reach for 182 strike out of the money puts that don't expire for at least on a 3 to 5 week play. I'd go 2 to 3 months out on your expiration price. Until then, we just might bottom out here. And in fact, our buy signal now, I'm going to show that here in the next chart, is a settlement above 219.91. Now, this is a 3/8 upside Fibonacci from that November 25 all-time high against that more recent February low. It did snag the highs a few weeks ago. It can contain weekly buying pressures this week. And if we close above 219.91, expect within 3 to 5 weeks upward continuation into this 235.83 to 237.32 region. 235.83 is a descending channel top. And this descending channel top may well contain monthly, if not quarterly, buying pressures. We could fill this wedge out for the next few months. If we close above the mid to upper 230s, all systems go to the upside as we head into Q3. Not going to see that, though, this week. On to Apple. Now, Apple we cover each and every week for our subscribers at wickedstocks.com, our paid platform. And so I don't want to give too much away. This is broad brushstroke analysis, but at wickedstocks.com, we do provide a 5 to 10 minute video every week that gives 3 to 5 day, 3 to 5 week swing trade opportunities. This is more like 3 to 5 months out to a year. We've got this one. This is a 5-year channel top, essentially, that's contained buying pressures now for the last year and a half at 288.78, below which channel support in the mid mid-190s should not be discounted as a longer-term downside objective. We've seen that occur inside of 6 months before. This could be potentially by the end of the year. On the way down, I do have 214.82. That is a 5/8 downside Fibonacci from that April low against the more recent December high. It also correlates pretty well with the old shelf top high area. So I consider this area to be realistic by the end of the second quarter. And yes, the mid-190s realistic by the end of the year, where we could bottom out through 26 and even through 27 and round up again. Of course, not going to happen this week, but if we did close above 288.78 over the next few months, we enter a whole new paradigm for Apple, where I would expect over the following year or two this full channel extension that is presently in the upper 380s. Tesla we cover every single day on our Wicked Stocks YouTube channel for free. You probably are already aware of that, so this is just going to cut to the chase here. We've been in a sell signal now for 5 weeks below the 425.88 rising channel bottom, expecting its sister formation at 331.25 as a 2 to 3 month target. We're about 5 weeks into that, and we may actually see this over the next 2 or 3 weeks. 331.25 can contain selling through the second quarter, possibly through the rest of 26. From here, we can round up into what is now the mid 420s and climbing within 2 or 3 months, and quite possibly within, I'm going to say, a full year of testing 330, we just might reach that 6-year channel top at 537 even. Upside, if we do close above 425.88 at the end of this week, not going to happen. Then we have a good second quarter low, or a good low through the second quarter. The following 3 to 5 months, then likely to reach 537. NVIDIA we also cover each and every day at wickedstocks.com. This is broad brushstroke analysis on the weekly chart only. We're giving away a little bit here for free. If you want to see a daily analysis in NVIDIA, go to wickedstocks.com. Take advantage of our 14-day free trial. We used to have NVIDIA on our YouTube channel, as you recall, but we did last week NVIDIA close and a significant sell signal, 174.86, having closed below this channel bottom. Now expecting this in a rapid descent, which may actually occur over the next 2 to 3 weeks, 154.98, where we could bottom out nicely for a few weeks, round up. But I do think our ultimate target following the settlement below 174.86 is 136.92, this 2-3 year channel bottom, a 2 to 3 month target. This is beginning to sound familiar, isn't it? We got a lot of 2 to 3 month downside objectives following last Friday's sell signals across the board in many big stocks and in the indexes. So 136.92 in play over the next 2 to 3 months, and over the next 2 months, late May, these two actually converge around 145. So it really is more of a mid-140s objective. And if volatility backs off a bit, this could be a much more, kind of a gradual descent as we continue into later May, the 145 area likely. But if it's rapid, expect to bounce in the mid-140s, and then I would expect a return to this support area, a number of weeks later. If we close back above 174.86, no longer anticipating this big sell signal. In fact, I would then expect, I'm just going to erase this, kind of this mid-190s area. I don't even commit to it just yet because I need to see what this low is first. And then next week, we'll show you channel resistance if we close back above 174.86 in NVIDIA. This is Palantir, not part of the Mag 7, but we do get a lot of requests for it. I'm actually going to start with this chart here. This is better because it takes us back to having tested channel support. You may recall this over the course of early February all the way into late February. We did close below this channel bottom 1 week, but very barely. In fact, we'd call this a range of support down to 125.41. That's the February 25 high, and it's still there. 125.34 is the descending channel bottom. This area is in reach over the next 3 to 5 weeks or sooner, possibly within 1 to 2 weeks of closing this week, back below 145.87. But as it turns out, we closed above 145.87, the high of the low on the weekly chart, about 3 weeks ago, which put us back into a show of strength. That show of strength above 145.87, still anticipating this 176.14 formation. So if you went long Palantir a few weeks ago, you can stay long above 145.87 because I do think by the end of April, we should see this 176.14 descending channel top where profits can be taken. You could even play the short side here because from here we could fall back, possibly into the mid-120s again within 2 to 3 months or less of testing 176.14. Last thing I'm going to say is if over the next few weeks Palantir closes above this descending channel top, then we've got a significant buy signal in the order of probably probably 2 to 3 months, 233.72 than anticipated. That would be a new all-time high for Palantir. And that is all I have. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 14-day free trial. I'll be back next week with another edition of your Mag 7 report.